Welcome to the Dough Roll of Money podcast. I'm your host, Rob Berger. Today in episode 312, we're going to talk about balance transfer credit cards. I got an email from a listener who had some good questions about them, and I thought I hadn't talked about balance transfer credit cards in a long time, so why not talk about it now? Going to cover what they are, what they're not, how to use them, how not to use them, I suppose, some issues, tricks, traps, things you want to know if you're going to consider a balance transfer credit card. So that's the main topic for today. Before we get to it, though, I want to read you an email from a listener named TJ. If you recall from the last episode, 311, we talked about the Flywheel. And I pointed out that I'm not an engineer. I don't play one on TV. I didn't stay at a Holiday Inn Express. Are those commercials too old to refer to now? Anyway, I'm an English major, so what do I know about flywheels other than their momentum, right? And I think they're a good analogy for everything from investing to, heck, building an emergency fund, which can seem extremely slow going when you start out, to building a business. In any event, I did sort of a shout out to you engineers, and TJ came through for us. Here's what he said. He said, Rob, I love the flywheel analogy. First, thank you for everything. I've been listening since the beginning when you did your podcast Everyday Marathon to kick things off after finding you through the Mr. Money Mustache forums when looking for more content to consume as I was learning about personal finance. I love the FIRE, which is Financial Independence, Retire Early. I love the FIRE community, but your show covers a much broader scope and a bit more realistic in my opinion. I'm 32 and I've been on this path now for about 6 years and have settled around a 55% savings rate. That's pretty good, TJ. 55% savings rate after going a little more extreme the first few years. I love it. 55% isn't extreme. No. No, that's great. That's amazing, actually. 55%, and that was, after you were extreme. So I think you're doing just fine, TJ. Also, I've referred you to my aunt, who is a single mother, and you have really helped her get on track as well, so thank you so much for that. Glad to hear that. Appreciate it. Anyway, since you mentioned, if anyone has anything to add to your flywheel theory and analogy, as a mechanical engineer, I gravitate to ideas that are easily conceptual and figured I'd throw in my 2 cents. I think the word momentum is the one thing I didn't hear you say that most people would relate to if you ever discuss it again. A flywheel is any rotating mass that is used to maintain speed with its rotational inertia. There is one in all cars that have a manual transmission. So when you step on the clutch with a flywheel, the engine more closely maintains its RPMs between gears instead of dropping to the idle speed, which would cause a rough transition. Race cars actually put a lighter flywheel in to increase output, sacrificing drivability, but they do some fancy footwork to compensate for that. Double clutching and rev matching. I have no idea what that means, by the way. I'm just reading TJ's email. There are 4 main characteristics that define the flywheel's energy and momentum. 1, the mass of the flywheel, and then he equates it to size of your nest egg. The distance the mass is from the rotating axis. Not sure how to compare this to finance, he says, but I don't think it's necessary. But if you have one heavy rotating mass close to the center, like a solid pipe on a rotating axis through its center, it doesn't have much momentum. But if you take that same solid pipe and bend it in a circle and connect it to a rotating hub like a bicycle wheel, it will have much more rotational inertia with the same amount of mass. Number 3, speed of the flywheel, expected long-term return on your investment mix. And 4, lastly, the drag resistance on the flywheel from wind resistance and friction from whatever bearing mechanism is being used. It's impossible to have zero drag, but it is possible to optimize it as much as possible. And the analogy there, he points to our fees in your portfolio. Thanks again for all that you contribute to the community, TJ. Well, first of all, TJ, thanks for the email. Secondly, for everyone else, who knew that when you tuned in today, that you would learn all of this mechanical engineering stuff. But there you go. This is the show. And I like the analogy. And I think TJ took it a step further. I have to confess, I don't follow everything he said. But then again, I was an English major, not an engineering major. So thank you, TJ. Appreciate the email. I really do like the flywheel analogy, that momentum. I mean, you have to keep in mind when you're starting out, there is no momentum, right? When you're saving from the start, you're starting a business from scratch, you've got zero momentum. It's going to be tough to get things moving. It's going to be tough to get that flywheel turning. But once you get it turning, then it becomes a little easier. And I think so many people don't achieve the results they want because they give up too soon, right? It's hard at first. And that's true whether you're trying to lose weight, get in shape, save money, build a business. It's true in relationships. Not that relationships, are always work, but hopefully over time, hopefully they get, I'm not sure easier is the right word, but in a way they are. I'll have to ask my wife. She'll have the answer to that. I'll let you know next show. All right. Now on to the main topic. This comes from a listener named John, and this gets us back to the balance transfers that I want to talk about today. He says, good morning. First, I'd like to thank you for the great podcast. I had been searching for a while for one on personal finance that I liked and had already been through a few of them before I found yours. I struggle with personal finance, budgeting, etc., and your podcast has helped me tremendously. I have a personal credit card that has a balance of about $12,500 at 19.15% APR. I've been searching your suggestions about balance transfer cards, and I would like to be able to transfer the entire balance. Already tried American Express, and they actually told me on the phone last night that they will only do 75% of the balance up to $5,000. I know I will probably be stuck with the 3% transfer fee, but I'm looking for the longest term possible, 15 to 18 months at 0%. The rewards are not as important to me, but I would not mind one with cashback incentive. The debt is currently on a Capital One Quicksilver Card, which has unlimited 1.5% cash back, so I can't move the debt to Capital One, and I'll explain that in a minute. My credit score is in the 720s. Do you know of any cards that will transfer the entire $12,500? I'm trying to avoid having to open up 2 cards to do it, or possibly 3, if that would even be possible. Again, thank you for the great podcast, John. Well, John, great questions, and we're going to cover them. And, at one level, balance transfer credit cards are sort of straightforward to understand, but there are some tricks. And actually, from his email, I'm taking a couple of notes of things that I want to talk about that I actually didn't have in my notes the first time I read his email. So bear with me. I'm going to take a note here so I don't forget. All right. The first thing I want to cover is to make sure we're all on the same page when it comes to what a balance transfer card is and what it's not. There are a lot of cards that offer 0% interest. Some offer them on purchases, some on balance transfers, and some both. But balance transfers, 0% on balance transfers and 0% on purchases are 2 different things. And it's important for you to understand the difference. So as the name would suggest, a card that offers 0% on purchases, you use the card to buy something, you don't have to pay any interest, even if you don't pay your balance off in full at the end of the month. And how long that 0% lasts depends on the card. I will give you some specific card suggestions at the end, but 12 months is common. There's 15 months, 18 months. There's even some 21 months. And so you can make purchases on the card. You can pay, let's assume, just the minimum balance in this example, and you won't be charged any interest. So that means your payment will go entirely to the principal that you owe. There'll be no interest until, of course, the introductory 0% offer expires, and then you'll start paying interest at whatever your interest rate is. Now that's 0% on purchases. One thing to keep in mind is there's no special fees when it comes to 0% on purchases. John alluded to balance transfer fees. We'll come to that in just a second. But with 0% on purchases, there are no transfer fees or other fees associated with using the card to make a purchase. That's one of the good things about using a 0% card for a purchase. Now, if we look at a balance transfer, it's a very different thing. Yes, it's 0% for some introductory period, but the idea there is you have some debt, typically on another credit card, although it doesn't have to be, and you transfer the debt, again, in this example that I'll use, from a credit card. I've, by the way, in the past, transferred debt from a home equity line of credit to a 0% balance transfer. But for this show, for now, just to keep things simple, we'll just assume it's coming from a credit card. You transfer from the old card that you have, that's in this case, we'll use John's example, charging him just over 19%, to a 0% balance transfer card. And when you do that, with some exceptions, which again I'll talk to in a minute, there's a transfer fee. 3% is, I would say, common, that's the norm, but I've seen them as high as 5%. And so if you were to transfer $10,000, or in John's case, $12,500, and it had a 3% balance transfer fee, you'd take 3% of $12,500 and effectively tack that onto your total debt. That gets added on. And so that's, something to keep in mind. Now, obviously, if you're paying over 19% currently, paying 3% for a transfer fee is likely going to be worth it. But keep in mind that once you pay that 3% up front. So for example, let's say you came into some money a month after you did your balance transfer and you thought, well, I'm just going to pay off the whole balance right now. That's fine, you can do it, but you don't get any part of that 3% back. You pay it up front and it's added to your debt. Unlike interest, where you're only charged the interest while you have the debt outstanding, pay off all the debt, and there's no interest, of course. The fee is an upfront fee. You can't take it back. Once you transfer the money, the 3% transfer fee gets added to your balance, and it's there, and you got to deal with it. Still, usually a good deal, but you need to keep that transfer fee in mind. I'll come back to that in a minute because there are some examples of some cards that don't have a transfer fee that I think are important for you to know about. All right, so that's number one. There's 0% on balance transfers. There's 0% on purchases. They're different, and in fact, at one point, I may have even talked about this years ago on Dough Roller, called I think I called it the slow motion balance transfer, and the idea was this: to avoid the transfer fee, don't use the balance transfer feature. Get a card that has 0% on purchases for whatever, 15, 18 months, and put all of your everyday purchases on that card, and then whatever that amounts to, utilities and groceries and gas, normally you'd pay that off in full, let's assume. But what you'd do here is you'd put it on a 0% credit card, and then whatever that payment would have been, apply it to your old debt on your old credit card that's charging you whatever, 15, 20% interest. I'm not sure. It's a lot of trouble, right? Because it's going to take you some number of months. In this case, let's say John normally puts $2,000 a month on a credit card for everyday purchases, and he can do this. He owes $12,500, so it's going to take him over 6 months for this, what I call slow motion balance transfer, all to avoid a 3% transfer fee. It was an idea I had. I'm not sure it's a good idea, but I throw it out there for you to consider. All right, so now we know the difference between a balance transfer, 0% on a balance transfer, 0% on purchases. Now, let's go to number two, the second thing I want to mention, and again, John alluded to this as well. He said his current debt is with a Capital One credit card. What that means is he can't now go get a different Capital One credit card and transfer the old balance from Capital One card number one to Capital One card number two. Issuing banks don't like that. So if your debt's with Citi, you can't get another Citibank credit card to transfer the debt. If it's with Chase, you can't get another Chase credit card. Obviously, there are 0% balance transfer cards available from all of the major credit card issuers, but it's something to keep in mind. In John's case, it's a fairly simple problem because all of his debt, if I understand his email, is on one credit card. But now imagine some of you, maybe you've got some debt on a Capital One card, some debt on a Chase card, some debt on a Citi card, and now it's like whack-a-mole. You're trying to take care of all of these at one time, and you're thinking, well, I'll get this balance transfer card that can work for these debts, but not that one, and then I've got to get another balance transfer credit card for the third debt. It can get a little like juggling, but it's something to keep in mind. You cannot transfer a debt from the same issuing bank to between two cards issued by the same bank, like Capital One. They don't allow it. All right, now, let me jump back to the transfer fee for just a moment. I mentioned that I'm going to give you some examples of some balance transfer credit cards at the end. I will, but I want to give you two of them right now, and I'm going to actually look them up while I'm recording just to make sure the terms haven't changed, because terms on credit cards can and do change frequently. But there are two cards, last time I checked, that do not charge a balance transfer fee. There may be more, but there are two that I know of. And the first one is the Chase Slate card. And yes, transfer balances, I'm reading this right from the Chase Slate website. Transfer balances with an introductory fee of $0 during the first 60 days your account is open. So you can't get the card and wait 3 months. If you get the card and you do a balance transfer within the first 60 days, there's no balance transfer fee. And how long does it last? As of this recording, 15 months. And that's right from the Chase website. So that's the first one, what I would call a no-fee balance transfer card. So John, definitely something to consider, particularly since your debt is on Capital One card. And you mentioned wanting 15 to 18 months. Well, there you go. There's a 15-month balance transfer offer, no balance transfer fee. The second one, again, if they haven't changed the offer, let me look it up. This one comes from American Express. Yes, so it's the American Express Everyday credit card. Zero balance transfer fee offer. And the transfer, again, you have to, I don't know what it is with the 60-day thing. You have to initiate the transfer within 60 days of getting the card. Of course, if you're getting the card for the purpose of transferring balances, shouldn't be an issue, but it's something to keep in mind. You don't want to apply for the card and then dilly-dally. I'm not sure why I used dilly-dally. In any event, it's almost the same terms, 0% APR on purchases and balance transfers for 15 months. So in terms of the balance transfer offer, the Chase Slate and the American Express Everyday card are almost identical. As you read in the email from, or as you heard in the email from John, American Express had some limits. I haven't confirmed that if that's, in every case for every card, I don't know. But those are the two cards that I know of that do not charge a balance transfer fee. And I think a great place to start if you're looking to transfer balances and you don't have an Amex, you're not transferring a balance from Chase in the case of the Chase Slate card, or American Express in the case of the American Express Everyday card. Now, point 4, you are of course limited to your credit limit, and you're not going to know ahead of time how much credit you're going to get. Now, it's possible that you could call them. I don't know if they can give you any sort of insight into that before they do a hard inquiry on your credit report. I do know that some credit cards can do a soft inquiry and give you some information in advance of actually applying about whether you'll get approved and what your credit limit might be. Whether they'll do that in the case of a balance transfer card, whether Chase does it, Citi, Bank of America, the list goes on. I can't tell you that. I don't know, but it's possible. But short of that, you're not going to know what your credit limit is until you apply for the card. Now, if I go back in time, oh goodness, this has probably been 8 or 9 years now. I had a number of balance transfer credit cards at any given time. We were paying down our debt. As I mentioned, I was transferring debt from a home equity line of credit. The debt was far more than any credit card company was going to give me in terms of credit. And so I just had to divide it up. And I wanted to take advantage of 0%. So at one time, goodness, I probably had 3 or 4 balance transfer cards, maybe 5. I remember one was great. It was a no-fee from Citibank that's not available anymore. And I think I got like a $20,000 line of credit. That was phenomenal, the good old days. Anyway, having multiple cards is not unusual. Now, in the case of John's debt of $12,500, I think it's not unlikely that he might be able to get a single card that will give him enough of a credit limit to transfer all of it to one card. But again, you don't know for sure. He mentioned that his credit score is in the 720s. I'll come back to credit scores in a minute. But that's a good credit score. Certainly, I think it puts him squarely within where you want to be for a balance transfer credit card. But of course, there are other factors in their underwriting process, including your total debts and your income. And so just a lot of factors that go into it. But if you're going to go into this and look at balance transfer credit cards, you should be prepared to potentially have to get more than one if you want to transfer all of your existing, say, credit card debt to 0% balance transfer cards. That's kind of just the nature of the beast, I think, with balance transfers. Now, and that really gets me to the 5th point. I think multiple balance transfer cards, it's common. The folks that I talk to about balance transfers, it's rare that I talk to anyone with a fair amount of debt that says I was able to transfer to just one. Again, that's somewhat of ad hoc data, I suppose, anecdotal, I suppose I should say. It's not a survey or a study, but in talking to a lot of folks about balance transfer credit cards and just dealing with debt in general over the last decade or more now, it's been 12 years, I guess. It's been common to talk to folks that have multiple balance transfer credit cards. And in fact, it's one of the reasons my wife and I have so much available credit with credit cards, because we've never canceled these cards, even though we don't use them anymore. And the amount of our available credit is just built up over the years from using one balance transfer credit card after another. Because think about this too, once you transfer the debt, unless you pay it off before the introductory offer expires in a year and a half, or whatever it might be, you're going to end up potentially transferring it again a year and a half from now. And we did that. We probably went through 2 or 3 cycles of balance transfers. And so we ended up with a lot of credit card accounts. So again, I think that's somewhat common. Now, I want to talk about credit scores in a couple of different ways. First, as I alluded to earlier, keep in mind that when you apply for any credit card, it's going to be a hard inquiry on your credit report. And that's, of course, true with a balance transfer credit card. Now, as you may know, a hard inquiry and the number of inquiries you've had over a relatively recent period of time will account for, it's a small percentage of your overall FICO score, but it is a factor. I think the theory behind it is, if you're all of a sudden applying for tons of credit, that could be an indication that maybe something's going on, right? Now, of course, in this case, it could be nothing more than John or anyone taking advantage of a 0% offer. But of course, these are formulas designed to try to assess the creditworthiness of millions of people, and so they're not that fine-tuned. And hard inquiries can lower your credit score. Now, in my experience, you apply for a credit. It's not like your credit score drops 100 points. However, there's no one rule about this. How an inquiry will affect your credit score, for example, could be very different than how it affects mine. And while FICO gives us a lot of details about how they calculate credit scores, it's really just, what we know is just the tip of the iceberg. There's a lot they don't tell us. I mean, so this is proprietary information. And so you can't, in many ways, you're not going to know for sure how the hard inquiry is going to affect your credit. For that reason, if you're looking to get a mortgage anytime soon, I would not be dealing with balance transfer credit cards. If you're thinking about buying a home, you're looking forward to refinancing an existing mortgage, and you're going to do that over the next few months, get that taken care of first. Then you can, because that's going to be far more important long term. Then you can try to transfer some balances to 0% credit card. At least that's my approach to it. I think if you're going for a mortgage or refinancing an existing mortgage, you want that credit score as high as you can possibly get it. You don't want to do anything that might jeopardize it. So I would avoid balance transfer credit cards until you get that house and you close and you've got your mortgage, or if you're doing a refi, until you get that done. The second thing, and again, I alluded to it earlier as well, you need a pretty decent credit score to get these cards. Now, again, there's no number that, if you're not at least 700, you can't qualify. It's not really how it works. But as a general rule, I would put 700 as the threshold. Can you qualify for, say, a Chase Slate card or a Citibank card or Capital One card with these good balance transfer offers if you're in the high 600s? I'm sure you can. I'm sure that happens. But if someone were going to ask me for a general rule of thumb, I would say you'd want your credit score in the 700s. Obviously, if you're in the 800s, even better. But I think 720 in John's case should be fine, I would think. Again, just like FICO, credit card issuers, the underwriting process is part of their proprietary information. So they don't disclose it. They keep it confidential. And so there's no way to know for sure exactly how they're evaluating these applications. Plus, it changes over time, as does the FICO score formula, by the way. So credit scores are a big part of this. You got to consider the hard inquiry on your account, in your credit report. You've got to consider what your current credit score is as to whether you qualify. And of course, you want to always be thinking ahead, particularly if you're going to be looking at a mortgage or a refinance. The next thing to consider, and John alluded to this as well, is what other features does the credit card come with? For example, does it offer cashback rewards or other kind of travel rewards? Some 0% balance transfer cards offer no rewards. Chase Slate is an example. It's a phenomenal balance transfer credit card, but there are no rewards with the Chase Slate. You do, by the way, get free access to your FICO score, which is nice. A lot of credit card companies are offering that, although they're not all offering access to your FICO score. I know Discover does. I'm pretty sure Chase Slate is a FICO score, although having just said that, I now want to look it up. Free credit score. I don't know if it's FICO or not. In any event, you get access to a free credit score. It doesn't say FICO. I'll have to dig into that, and I'll leave a note in the Facebook group on that. By the way, the non-FICO scores, this is like let me just go down a rabbit hole for a second. I find the non-FICO scores to be very good. I think they're close. They give you they'll tell you what's hurting your score and helping your score, and I find it to be very consistent with what will hurt and help your FICO score. The range may or may not be different, but I've yet to see, and I did a lot of comparisons back in the day between my FICO score and other scoring models, and I found them to be all fairly consistent. So when some people, they talk about other scores as being FICO, I get that in the sense that most lenders today still use FICO scores. But you can take that too far, because the reality is you may get a FICO score from Discover, for example, and go apply for a loan from a lender that uses FICO, but guess what? They use a different version of FICO, or maybe they use a version that's specific to their industry, like credit card industry has specific credit for FICO formulas. The car industry does. So, I think you can get a little too uppity about is this FICO or not, in my view. I think a lot of the scores can be very helpful if you're trying to improve your credit. In any event, sorry for going down that rabbit hole. All right, so what have we talked about? We've got the difference between balance transfers and purchases. We've talked about not being able to transfer debt from the same bank to a credit card issued by that same bank. We've talked about balance transfer fees, and I've given you some examples of cards that don't charge a balance transfer fee. We've talked about the credit limit issue and potentially the need to have multiple balance transfer credit cards. We've talked about how it affects your credit score. And we've talked about, rewards. We've got some that don't have any, like the Chase Slate, as I mentioned. But are there some that offer rewards as well? And the answer is sure, there's both, right? So John alluded to the Capital One Quicksilver Card. And since these terms change all the time, I hope you'll bear with me. I'm going to pull up these online as I talk about them, just so I can read the terms right off of the issuing bank's website. We're going to start with Quicksilver. It's a good card. It's 1.5% unlimited cash back. Plus you can earn a $150 cash bonus at the moment. So that's good. And it's balance transfer. 0% for 15 months. And there is a 3% fee. So a lot of times with the no fee balance transfer like Chase Slate or longer term balance transfers, you won't see as rich rewards. In this case, you're getting 1.5% cash back. You're getting a 15-month 0% APR on balance transfers, which is reasonable, but you are paying a 3% transfer fee. Another card that's one of my favorites, and I'm just going to make sure that hasn't changed, but this is a card I carry and use every single day, and that's the Citi Double Cash, and it's basically 2% cash back, 1% when you make a purchase, 1% when you pay for that purchase. Yeah, they're offering 0% APR on balance transfers for 18 months. So that's even longer. And again, there is a 3% balance transfer fee, but that's 18 months, and you get what I think is one of the best cashback cards, general purpose cashback cards available. Now, Citi actually offers a longer balance transfer, and I think it recently changed, so let me look that one up. It's called the Citi Simplicity Card. Not a big card for rewards. Oh no, now this one's interesting. This one's 18 months. At one point they were 21 months. Let me, bear with me for just a second. We're gonna find a 0% balance transfer for 21 months. The problem is, and I look at these frequently, they change so often. And in fact, there were some big changes recently, which is why I didn't research these ahead of time and have them in my notes, because I was afraid they were changing. Okay, so yeah, Citi Simplicity, this is interesting. So Citi Simplicity is offering, I thought they were, and I think this was a recent change, They are offering 0% balance transfer for 21 months. They were at 21 months a while ago. They dropped down to 18 months. Now they're back up to 21 months, although I think this is literally happening as I'm recording, in the last couple of days as I record this podcast at the end of March. And so I'm not sure it's been updated everywhere, but I'm looking at it now, and it is 21 months balance transfer. However, transfer fee is 5%. Not great. So when I look at all of these, how would we put this in context? And by the way, Bank of America is going to have balance transfer cards. I haven't obviously listed all of the major credit card issuers, but they all have them. And in fact, let me just pull up a Bank of America example for you, and then I'll pull it all together. How I would look at this if I were doing this today. Yeah, so Bank of America card, 0% APR for 15 months on both balance transfers and purchases. You got to make the transfer within the first 60 days, and the transfer fee is 3%. And they may have even better deals, but again, in my experience, all of the major credit card issuers have balance transfer offers in the 15 to 18 month range. Citibank is the only one that I know of at the moment. There could be others out there. It's the only one I know of that's 21 months, but you got that 5% balance transfer fee. So how do we pull all this together if you're struggling with debt and you think this might be able to help you? The first thing I would do is start with Chase Slate, assuming your debt's not all at Chase. 0% for 15 months with no balance transfer fee. You just can't beat it. Now, would I look at the Amex Everyday card? Well, I would, but I'm a little concerned about what John had to say in his email, and so I'd probably reach out to American Express to understand that potential limitation. But again, even if you're limited up to, say, $5,000, it's a 0% for 15 months, no balance transfer fee. It's a hard deal to pass up, even if that means I've got to get one extra balance transfer card because I can't put all of my debt, say, on that card, or even on that card and the Chase Slate card. Then I'd probably do it to avoid 3% fee because that adds up. And then for me, I would go to the Citi Double Cash. It's only 3% transfer fee. It's 0% for 18 months, and it's a great cashback credit card. As I said, I use it every day. Unless we're buying something where we know we've got higher rewards, like for travel or eating out, but we use it at the grocery store, although there are cards that pay higher now that I think about it on groceries. But in any event, we kind of use it as our everyday card and have for a number of years. So to me, that's kind of the order I would personally I would go in. I would start with the Chase Slate. I would look at Amex Everyday, and then I'd probably go to Citi Double Cash. Hopefully, between those three cards, you could cover all of your debt, and I would probably do it all at once. Again, always mindful of the impact on your credit, always mindful about other financial goals you have, particularly if you're looking to buy a home or refinance your mortgage. I would do that first. I would be mindful of your credit score. If your credit score is in the mid 600s, for example, I would work on getting that higher before I tried to do this. Ideally, you want to be in the 700s. Again, that's not based on any information any credit card company has ever given me. They don't disclose this as far as I know. It's just based on my experience and in talking with other folks. So if my credit score were low, I'd work on building it up. But I think taking advantage of 0% balance transfers is a great approach to paying down your debt as fast as you can and for as little interest as possible. So even with the 3% balance transfer fee, I think it's worth it. I personally would probably avoid the 5% transfer fee, even for those extra couple of months. I just think it's too rich. But at the end of the day, you need to do the math to figure out what's best for you in your specific circumstances. So that's about it. One thing I would ask, if you know of a great balance transfer card, and again, I've not tried to list them all. I've given you some examples of several and how I would approach it. But if you know of other great balance transfer credit cards, please either shoot me an email, dr@doorroller.net, let me know. I'm happy to share it on the show once you send me the email. Or even better, join the Door Roller Facebook group. So just go to doorroller.net/Facebook group, and it'll redirect you. Join. I'm the one that I'm the gatekeeper of the Facebook group. So I get requests every single day, and I respond to them very quickly. It's a great group. And if you're not part of the group, you've missed something big. I posted a picture of me doing a pull-up. I mean, that's just not something you see every day. And that sparked a whole kind of conversation. You'll have to join the group to see it. When I was in Israel, I'd had a pull-up competition, and I lost. I know. I don't know what happened. True, the guy was half my age, but that's just, I'm making excuses now. I will say, you ever seen the CrossFit people do a pull-up? If you're CrossFit, you might want to just turn the show off now, because we're done talking about finances, so just shut it down. Because I don't have a whole lot to say nice about CrossFit, particularly when it comes to pull-ups. These swing your leg pull-ups, and what is that? We should give it another name. It's not even a pull-up. I don't know what that is. And I got to tell you, that's what he was doing. And I thought, well, I was a guest there. I didn't want to cause waves, nice people, let him do his thing. So I did a marine pull-up, a dead leg pull-up. There's no swinging your legs. Okay, I'm still just making excuses. In any event, if you want to see me doing a pull-up, join the Facebook group. There's a picture. I even had like 20 or 25 pounds hanging from my waist. See what you're missing if you're not part of the Facebook group? But more importantly, you can then tell us about the great balance transfer cards that maybe you found that I don't know about. Would love to hear from you. Hey, until next time, remember, the best thing money can buy is financial freedom.